you got some cash burning a hole in your pocket.
Well, I mean, it is costly to hold cash at these levels, I must admit.
All right, are you holding it in US dollars, or which FX are you preferring to hold cash in?
Yeah. Well, right, so, you know, when it comes to currencies, so our cash levels are much higher than the neutral levels that we have. I know it's costly to hold cash, but it's a relative value game, right? So, I mean, I know North Korea is not a big deal for a lot of people right now. It could just fade away. But I don't think the market is priced in any uncertainty at all. So on the currency side, we're actually starting to hold more and more US dollar. First of all, the pessimism. It's amazing how we've gone from extreme optimism at the start of the year that no one could see US dollar go anywhere but upside. And now everyone just sees US dollar to go anywhere, just edge it all down. I'm not saying we're right, market is wrong, but at extremes, when sentiment makes such a U-turn, and underneath, things are actually not as bad. I think we are just adding to our US dollar exposure at the expense of emerging market effects, which is also a hedge against potential market sell-off as well.
Yeah, because at the end of the day, you do have Federal Reserve likely, you know, staying pat on the rate increase, right? But if you take a look fundamentally, everybody's still very buoyant about the global economy. Why do you think that it would be a North Korea, or that the markets have not priced in what you're seeing as a meltdown of global equity markets and moving away from this ahistoric, you know, long bull run that we've been seeing?
Yeah, well, you know, fundamentally, I agree. Things are starting to look better. Like, global growth is becoming synchronized for the first time in 2007. But equity market doesn't always correlate with the stronger growth, right? So there's leads and lags here. And when we talk about a correction, I'm not talking about the end of bull market. We're talking about a correction which we haven't seen for 12 months. We haven't really had a correction in US equities much at all. And when you look at the fundamentals underneath US equities, in particular earnings, we had a very strong earnings quarter reporting season just recently. And if you look at the market response to every company that beat expectations versus the companies that actually disappointed expectations, was quite lopsided. Market punished the ones that missed a lot more than rewarding the ones that actually beat. So that already tells me market is saturated, so it's a lot of good news is priced in. Two, they're pricing commodity prices. We've seen massive rise in metal prices right now, so on the back of obviously good demand increasing, which is good, but also supply concerns around China. With a lag, you look at corporate profits, input costs are going up, pricing power is still low. So this is going to cause margin pressures at least for a quarter until pricing power increases and CPI comes back in. So again, on the earnings side, there is room for disappointment.